Hi, and welcome to the Investing on a 9 to 5 podcast. I'm Paul.
And I'm Teddie. We are excited that you are joining our show, Investing on a 9 to 5, where we will talk about our investment journey, our current strategies, and learn about all kinds of investing related topics. But before we dive in, we are not financial advisors. We will not be held liable for any personal investing decisions or losses that you may occur in the market. This page is purely for entertainment purposes only.
Hey everybody, all right. It's been a little bit, but we're finally back together again. We got the Dividend Dog here and Paul from Options Legacy. What's going on? Yeah, that's right, man. Teddie was on his delayed honeymoon, which I'm really excited that they got to go out and cruise the open ocean. We'll talk more about that later, I'm sure. I want to talk about that a little bit, but what we want to do is get together today and drop a little information that we've been looking at. Nothing too specific, nothing too deep. I wanted to give an update on my real money experiment that we're doing with Palantir and SoFi, something that if you look at, you can apply to different lower cost options. You can use a smaller account to do the strategy. So we'll update that a little bit. Talk about a new position I opened up in a dividend paying stock, and the dog has got some stuff we want to talk about on his end. He's got some new strategies he's got going on, and stuff that he's going to talk about. So before we get going to that, I want to talk about this news article that came out. So I read something about these guys. You may have heard about them. It's called the Atlas Trading Group, and there's a bunch of bros, as Teddie found them being called.
Yeah, they're calling the Fintwit bros out here.
Yeah, they got indicted by the SEC for a bunch of basically front loading stocks and calling out that they're buying stocks or selling stocks and basically getting their retail followers to follow along and enrich themselves in doing it. And it's that fine line that we walk. And I want to talk about it because we're not in the business of telling people what to buy. We're not in the business of saying, hey, these are the companies you need to get into. This is the strikes you need to buy or sell as far as options goes. What we're in the business is kind of like saying, this is what we're doing as two dudes with regular jobs, families to support, learning some investing strategies to help increase our retirement lifestyle is what I'm thinking. So there's the beginning at the little intro, there's that little thing you see on everybody. This is not investment advice. I'm not a financial advisor. And I read some stuff actually that after reading about the Atlas guys, those little disclaimers, they're really not legally binding, I would say, you know what I mean? So we want to make sure that we're not at all, we'll be 100% open and honest, I think is what the important part is. Anything we talk about, we'll say, we're thinking about opening a position in this stock. We've already opened a position in this stock. We do reserve, obviously, the right to open, close, buy, sell, roll, trade, do whatever we're going to do with our positions. And we're not going to notify any of you. We're not going to tell any of you what we're doing with our stocks. We're going to tell you what we're looking at, what we may buy, what we did buy, but we are absolutely under no circumstances are we saying, oh, hey, go buy, JEPI, go buy Rick, go buy, Celsius
Intel,
beverages.
Neo,
whatever it is.
We're not telling you to go and dump your, your savings
not even
into
a dollar,
or anything
I'm
like
not
that,
even
or
saying
even risk anything like that.
Do not risk any money whatsoever on anything we're telling you about. We're just doing this for our own, we're building up our own knowledge base, talking to people who have knowledge beyond what we do to learn from them and just share a good time. Me and Teddy become pretty good friends, and I like doing this. It's fun to do. As long as it's fun to do and it's not stressful, I want to keep doing it. So what did you read about? Well, yeah, it's not like we got jobs or anything.
Yeah.
So what did you find out when I mentioned it in our text? What did you go find out about these bros? And I'll tell you my background with that if you're done.
Well, when you sent me the text, it was yesterday, and I had just read about some of I was just seeing some tweets that were out from one of the guys' Twitter account. Some people got blocked from him. One of the guys. And I checked, I went down the rabbit hole and started checking his profile out. And, I saw the lifestyle that they were living. I'm like, oh, wow. These guys, these
They're
guys
ballers.
are doing it big, every second of the day. I mean, and then I'm like, all right, well, I started reading this article here that got pulled up, and I started figuring out that they were pumping stocks and shorting it at the same time,
Right.
and now it's the SEC is coming after them, and a lot of people lost money, and
and they're not messing
now
around.
So that's as far as I got from it, and it's just a lot of people are on Twitter, are just saying like, hey, this is what happens when you join these huge groups, and you're not really doing your research on it, and you're kind of just putting it in the hands of someone else, and this is the price that you do pay, unfortunately, as an investor. So this is pretty bad, but I mean, looking in our market, I mean, we see a lot of backdoor trading going on too with bigger guys, and they're not going after those guys. So it's
Well,
that teeter
eventually.
tire and balance, and figuring that information out. But it's crazy, these guys are that's fraudulent.
It was a huge group.
$100 million.
Yeah, I saw that. 114 million they profited off these. So and I'll full disclosure, I've been in these groups. I've followed these guys, and one of the coolest things that I wanted to bring up was all this went down. I read about in the news, and I've been able to curate my Twitter community down to where none of this popped up in my feed on Twitter. None of the news about these guys, none of their names, no references to them popped up anywhere in any of the people I follow on Twitter. So
same with mine.
Well, to me that says, okay, we've got a strong group that I'm following on Twitter. Number one, so I don't have none of these YOLO diamond hands guys that I used to follow. Like I said, full disclosure, I used to follow these guys. PJ Matlock, Hugh Henney, all these guys that they indicted. I followed them for a minute. I was in that Discord and on the Atlas group. I never paid. I don't know if they had a paid subscription service. I never paid for it, but they did have a free Discord, and it was huge.
It was free.
It was a free Discord. Well, it was free because they were pumping. They were saying, "Oh, here, I'm in this," or the one guy who's always throwing up is like the big multimillionaire. His screen name was Zach Morris. I guess he's one of those guys who got indicted.
He was that was the first profile I went to, because I was like,
he was the main. He was kind of the main guy. He was kind of the main ringleader. So they also had this podcast that I used to. I listened to it right up until this summer. Actually, it was called Pennies Going in Raw, and it was entertaining. It was Hugh Henney and I forget the other guy who they were the co-hosts. But they would talk about Twist. They'd have these other guys on as guests. As you read through the news articles, you're finding out that the guests they were having on were actually their little conglomerate of traders. So they were putting each other out there as like, oh, we're going to talk to the dividend dog today, and he's made himself a multimillionaire by being this great trader. Tell us about yourself, and then in reality, they were all coordinating this behind the scenes to put out this image that they were bringing up these traders and people were making money off what they were doing. I made a little bit. I followed some of their trades. I made some money on it, I can tell you. But it wasn't to the point where, like I said, it was such a huge Discord, so many people. It was like after the GameStop thing happened, all of a sudden Wall Street Bets went from like a few 100,000 people to millions of people. And if you ever went to the Reddit, it was just so deep and so much noise that there's no way you could like discern what was good, what was bad. So it was too much for me. So I didn't stay long. But anyway, when I saw the news and I saw the people involved, I was like, holy crap. These are people that I had followed. I had, not interacted with so much, but had been a part of that group. So it was interesting. And like I said, I bring it up only just so we can be transparent about what we're doing here and what our goal is, and to give people warnings out there that these groups are doing this. A lot of these things out there, that's what they're doing. They got a group of people together to throw up a bunch of stocks. They're front loading, which means they're buying. So like, let's say there's a stock, PQZ. Me and Teddy, we got 1 million followers on our YouTube. We have 1 million Facebook and Twitter people. So we get in the back and we say, okay, I'm going to go and we're going to buy $5,000 worth of PQT, okay? And Teddy, okay, I'm going to buy it too. And then we come out the next day or the next week and we put out there on our show, hey, this is a great stock. We think it's going to go places, blah, blah, blah. we really believe in it. If you want to make some money, YOLO, diamond hands, rocket ships to the moon, Lambos, go buy this stock. But we already hold it.
Right.
So we watch our followers go and buy it, and it runs it up, has a big run up day. So we go, okay, great. Now it's time for us to sell. So then we dump and we get out, 100, 200%. But we hang on a little bit.
You guys are still purchasing it
all
because
the
it's still
retailers
running it
are
up.
still there. Yeah. So that's just, and then we end up, it's, either we stop talking about it completely because we just, forget about it, or we just kind of hang on a little bit as it slowly starts to lose its volume because all of our followers have stopped buying it. So it's going to lose volume. It's going to drop in price, and boom, people are going to be bag holding.
And also, then by that time, too, guys, they've already found another stock.
Exactly. We're already moving on to the next stock.
You're on to something else because it basically gives you like a high. It gives you a high.
So that's what these guys are doing.
Run up like that.
Yeah. So I know most of our listeners are highly sophisticated, and they're not going to fall for this kind of stuff. They're not going to fall for the phone call from the IRS.
You guys better not.
They're not going to fall from the IRS phone call
you.
saying, go send us a Best Buy gift card, or else we're going to, put your son in jail in Mexico. I mean, all those scams that go around there, right? So we're way too sophisticated for that. But, just be advised. That's what's out there. And I want to talk about it because it's in the news, and, it didn't hit close to home, but, I had a little bit of interaction with those people. So it was interesting to me.
Yeah. No, thank God we didn't have any of our followers or anyone out there, like you said.
I don't think so. Because like I said, I didn't see it on Twitter anywhere in the little group that we're in.
Everyone's still getting dividends and buying stuff. So
dividends. I got my PG.
Stacking.
Shout out to Dave. I got a Hershey dividend the other day. So
oh yeah, dude, Dave is loving figs, Jack, Hershey's, and ET. He loves them. Or Rick.
And Rick. We'll find out next week about Rick.
Yeah, I can't wait to get on Rick, man.
I was funny because it was not long after he'd started kind of talking about it that the Motley Fools on there, and I posted on Twitter. In the same episode of Motley Fool Money, they talked about railroad ties and telephone poles and Rick.
Mm-hmm.
And if you don't know, Rick is a gentleman's club. So I put on Twitter, I said it was a complete irony that the Motley Fool is talking about wood poles and Rick in the same episode.
Rick.
And the host actually kind of liked that a little bit. So I thought it was funny.
That is
a little
funny.
innuendo going on. Funny. All right. So what I want to get into now is, so I've been doing this with my own money. A little example of
what's been going on.
Yeah, I'm not going to share it, but the live link is in our link tree. So if you go to our website link, it's in our show notes. It's on our Twitter page. It links you to a link tree where you can go to our YouTube page. You can go to our Twitter page. You can go to this Google Sheets that I maintain with these two holdings that I'm rolling through different kinds of option strategies. So the first one is Palantir. And what I did with Palantir was on November 1st, I bought $1,000 worth. I flipped around and I immediately sold a covered call on those. It was 111 shares. I immediately flipped and sold a covered call on 100 shares. With that covered call money, I went and I bought another almost 3 shares. It was like almost $25. So I went around with Fidelity. I can just put in a dollar amount and buy dollars amounts instead of shares.
Mm-hmm.
So then I bought some shares, and then that call expired. On November 14th, I sold another covered call contract for another $26. Bought some more shares with that. So what happened was today, because that call was coming in so cheap, I bought it back for a penny, so $1. So I bought I bought that back. Are you looking at it right now? I see a little red box. Are you looking at the page? Huh? So
I'm trying to get back. You probably see my eyes on my screen. I'm trying to get back to it, but yeah, I'm in here now. Sorry.
That's okay. It's cool. So right now we're sitting on 117.64 shares that I bought for $8.95. And because I bought that back, we don't have any money coming in on it, but we're at the $8.95 originally starting price. My price per share is down to $8.50. That's from selling the calls and buying some more shares at lower prices down the line. We're down to $8.50 because today's a red day, a major red day on everything.
Yeah,
I'm going to wait for a green day to turn around and sell another call contract on this one. Is
it because the premium will be higher?
Exactly. On covered calls, you'll get a higher premium on the green days. On cash secured puts, you'll get higher premiums on the red days because that's the direction that stock is moving.
Okay.
What this also does it, and if you look at it, if everyone will look at the page, so I have 111 shares. On the first, I got 25 cents a share for those calls. On the 14th, I got another 26 cents a share. Now, what other kind of stock pays you a certain number of pennies or cents for every share you own on a regular basis? Dividend stocks.
Well,
but Palantir is not
yeah.
Palantir is not a dividend stock. But this is kind of a way to get a pseudo dividend going on a stock that doesn't pay a dividend. So the calls I sold on this thing were in the 9 and 950 range, and it's trading well below that. I think Palantir right now is at 687 a share as of right now. So if you have these shares and you at least 100 shares, and you can sell these contracts, and I mean you can sell them, way out of the money, where you're never even going to have a huge risk of them being called away. Even if you're getting 5 or 10 cents per share, that's $5 or $10. If you do it weekly, $5 or $10 a week on 100 shares, then that's a huge, you're looking at 20-25% annualized return on that you'd have to get into some really risky dividend stocks to get that kind of return. So this is kind of a way to create like a pseudo dividend paying stock. You can do weekly, you can do monthlies, whatever you're comfortable with. That way you're generating that dividend type of income that you can basically, like I said, with Fidelity, you can kind of drip it back in by just buying the shares with that money each time you do the sell, increase your share count, and keep that rolling. If you like the stock, if you don't like the stock as much that you want to keep buying it, then just collect the money from it, use it for other plays, then keep your 100 shares as a covered call basket. A similar thing with SoFi. You have any questions about that before we roll? Is that something?
Oh, no. I'm starting to understand how it all works with the option wolf strategy. No, like I said, I remember you sent me HBI for Haynes. It's like a good one. That's got some good.
It didn't turn out as great as I'm in it. I bought some shares, but it's really taken a crap since I bought it. So I wasn't able to sell the covered call contract for what I was looking to get for it. But I'm holding the shares. I don't have any open contracts on it right now. And I'm just going to wait for it to turn around and green a little bit. It's got a little dividend too, so I think that's not going to hurt it too much.
Mm-hmm. And then did you know SoFi just approved now for people to do options trading now?
Mm-hmm.
So I was thinking about, because I banked with SoFi, just having.
I haven't looked at the platform. I'd have to look at the platform and see how user friendly it is, because you can get some of these platforms. Like I use Fidelity, and just because that's like where I have some other accounts with them, and it's not the most user friendly when it comes to options. But like,
I agree.
Robinhood, I think is. I don't like Robinhood just kind of in principle, but I know Robinhood's pretty good. Webull is good for options. It's got a good user friendly platform, and Thinkorswim is like one of the best.
Yeah, yep. I like Thinkorswim. I'll send you a screenshot of what the SoFi platform.
Yeah, I'll take a look at it.
Yeah. Because I really, that's one thing I want to do. It's a lot that I want to do, and obviously it costs us money straight up, guys. It's you're purchasing 100 shares of that stock up front, essentially.
Well, there's also what I am doing with SoFi. So with SoFi, what I did was on November 2nd, I sold 2 puts on SoFi at a $5 strike price. And what that means that had I saw it on the 2nd with a November 4th expiration. So what that meant was if SoFi was trading at $5 or less on November 4th, then I was going to be buying the 100 shares for $5. I sold 2 contracts, so that's 200 shares at $1,000. This is my little $1,000 test. I sold those contracts for 10 cents each. I collected almost $20 after fees and commissions. So that put $20 in my pocket with $1,000 set aside as collateral for the inevitable put if that stock traded below $5. That expired. I did it again the next week. That expired. I did it again the next week. And so I had an 11.4 one that expired. I had an 11.11 contracts that expired. So that way I'm up almost $40. On November 14th, I sold 2 contracts with a December 16th expiration. That netted me 16 cents each, so about $30 total. I collected on that trade. So we're getting up close to the 16th now as a $5 strike. So that means if as of today, I would be assigned those two contracts because SoFi is trading at 460 right now. What I did yesterday was I rolled. So here's an example of the roll. I took those two 12/16 contracts. I bought those back for 34 cents. So I sold them for 16. I'm buying back for 34. So right now, if you just left it there, you'd be at a loss, right?
Right.
100% loss. Well, what I did as part of the roll was as I'm buying back those two for 34 cents, I'm selling two more for a January 20th expiration date for 54 cents. There's a 20-cent difference in that. So I'm collecting $20 per trade on that roll. So I'm still coming out ahead is what I'm saying. Even though I'm buying back my original contracts as more expensive than I sold them for, I'm selling the two contracts for more than the difference. So right now with SoFi, I'm open on the two contracts with a January 20th expiration at $5, and we are sitting at a little over $100 in profit in a month and a half on that $1,000. So it's 10%. So we got a 10% return on that $1,000 that have been set aside. So 10% a month is not bad. If you can make 10% every month on a low risk trade, especially if you like the stock, then it's not that big of a deal. My alternative would have been to let the shares go ahead and get put to me today, because it's not going to hit $5 today. I would then be holding 200 shares. It would cost me $1,000. I forget what my cost basis was. Well, I was in for what, 20, 40, 50, 60, 70. So $930 would have been my out of pocket. And I'm not good at math. So 930 divided by 200. I would have been at 465 a share. So I would be even right now if I'd gone ahead and taken the assignment of the puts. I decided to demonstrate the roll for everybody so they could see how the roll works. So now if I'm sitting there with $107 in, if I were to put the shares on the 20th, roughly, $450 is my cost basis right now in January. So it's just a way to showing you how you can do this, on a monthly basis to increase your income a little bit. And it's like I said, a 10% return on a month is not a bad return for some experience and learning how these options work without risking a whole bunch of money. Because there's options contracts out there that are, $20 and $30, which, it almost some, $3,000, $4,000, $5,000 for one contract is a lot of money.
No, I definitely agree. And, this is one thing, like I keep mentioning to you, this is one thing I want to get into and be able to have it as a part of the portfolio producing income, as a non-dividend stock.
So the other thing I want to talk about was a new position I opened up. I have purchased these shares. Actually, I haven't purchased the shares. Let me roll that back. I sold a put on them, and I'm going to get assigned the shares today. And this is on JEPI. I know JEPI is a big one out there with a lot of the dividend seekers. JEPI is an ETF that holds, I think it's 100 or 250 stocks. I forget.
Here, let's see. I'll pull it up
pull up the holdings. So what JEPI does is they sell covered calls on its underlying holdings in order to generate money, and it takes those profits from the covered calls and basically returns it to its shareholders as a dividend. And it does that on a monthly basis. There's a couple different strategies out there, a couple different tickers that do this: QYLD, RYLD, JEPI. And they all based on different underlines. I think QLD is based under the QQQs. RYLD is IWM, the Russell 2000. So the difference between JEPI and the YLDs is, and I found this, I found some nice person on one of the Discords I belong to. who was able to explain it like I'm a 5-year-old, because I need that. QYLD and the YLDs will sell their covered calls at the money. So you generate more premium that way because you're selling at the money. It's closer to the strike price. There's more premium there, but there's also a higher likelihood that your contracts are going to get called away from you. So they might be selling at a premium that's lower than their cost basis. It's going to cause the underlying stock to lower. JEPI is selling out of the money calls. So they're not generating as much premium because the calls are out of the money, but they're not getting their underlying called away as often. So they're generating the growth for the underlying because they're holding on to the underlying stocks longer than QYLD. So it was that difference in the strategy that made me go ahead and decide to jump into JEPI. I sold 2 contracts that expired today. I sold $56 strike prices. I got 40 cents per contract. So my cost basis is $55.60. It's trading at $54.87, so that's not too bad for me right now. I don't care being that much down because everything's red today. So I'll get those assigned to me today. I'll have 200 shares of JEPI. And I'm just going to let those sit there. I'm going to collect that dividend. I don't think I'll drip it. I think I'll go ahead and just collect the dividend and use it to deploy into other things.
Turn on the drip.
But the account that this is in isn't like a long-term account. It's something that's just kind of sitting there that I need to have some liquidity in. If I was in like my Roth or something like that, I would definitely drip it and set it and forget it. But that's not where I have it. But that's my choice.
Oh yeah, it also is to go back to how many holdings it's got. It's got 127 holdings, guys.
Okay,
127.
So you can do the same. So like I said, and JEPI doesn't have the kind of options premium and volatility that's going to get you a lot of premium, but you can look at other ones. SCHD might have some more option premium. I haven't really looked at that closely, but if you're interested in these stocks, look at that strategy of selling a cash secured put at a price that you want to pay for it. Get a few bucks for holding it for a minute, and if it drops down to your price, then you're going to buy it. If not, then you repeat the process for next expiration. You can sometimes generate more money that way than you would in the dividend, depending on the stock and the yield it produces.
Yeah, we're just holding it in our portfolio. Shout out to my wife; she's got it in her Roth.
Oh, good. We'll have to do an episode of our spouses' portfolios here one of these days.
Oh yeah, spouse power. Shout out to him.
Does your spouse know what's in her mind? I go, oh, that you own that store. She's like, oh, really? So.
Oh yeah, that's the same answer I get. Oh really?
Yeah, good.
But yeah, she's starting to get more into it now this year for sure.
Oh, cool.
Yeah, she's
Did you tell her that the dividends paid for your cruise?
I wish. One day.
This goes back to our previous conversation. We're not paying for cruises with anything we're getting from the stock market. This money is going
guys.
for
no.
Our 9-to-5s pay for our lifestyle, and you can tell. I've got my my Walmart
dipping
thermal shirt on, and so
yeah. I mean, dude, I got some clothes off of eBay before the trip.
There you go.
Hey, I go there before I even go look at anywhere else on Amazon.
Oh, my wife's big on Zulily. I mean, she gets all kinds of stuff on Zulily cheap. That's how our kids are all dressed.
You said Zulu?
Zulily. Zulilly.
Oh, yeah. I haven't heard of that one. Okay.
Yeah, check it out.
I'm gonna check that one out. Heck
so,
yeah.
What do you have for us today, man?
JEPI is obviously talked about heavy out there. So when the gang finds out we got another JEPI member, Carbon Tim out there is gonna be happy.
There you go.
Gonna be happy about that. Awesome. But guys, we're gonna swing it over and we're gonna give a little update on what's been going on in the dogs portfolio. Right now, we just hit 100 shares with MPW last week while it was on the cruise. So shout out to MPW. Finally got 100 shares in that. But what happened and how I got that, I didn't even actually put any money to doing that, guys. What I did was I used my dividend from Zim.
Okay.
Shipping. I let that drip down to, I think it was $118 dividend. I put that right into MPW while I was on the cruise. It took me 5 minutes. Boom. had my 100 shares of MPW. Now MPW pays me pays the portfolio $117 a year, meaning that's at 30 bucks a quarter, means I get an extra two and a half shares a quarter. So that gets me about 8 shares a year off of now of literally if I don't put any money into it now.
MPW's got some good options contracts.
Which is awesome. Oh, do they?
Yeah.
See, guys, this is what I'm talking about. This is why we're here working together, growing, because now I'm gonna figure out how I can make some extra income off of MPW with these options here. But yeah, MPW REIT, they own, they're in the business of leasing hospitals. Obviously, they have a lot of, bears with the Stewart financials and not paying back and cutting the dividend, but we're not going to get too lost in the weeds on it. But that's just one of the updates, for the portfolio. Now, moving on to a new position that I did open. I opened a position in Intel. I read a book on the honeymoon called Chip War. I'm basically finishing it up now, but give you guys a little quick history of it. Just gives you a history of the chip, the semiconductors and, the history. And basically we need chips for basically everything. I mean, all the way down from vacuum tubes to our phones opening and closing, computers, everything will need some chips at some point. But I like Intel. They have a lot of beat up around them right now, just because they're the free cash flow is going down.
Oh, the chip sector has been hammered anyway.
Yeah, and chip market's just been handled down. But they got a price to earnings ratio at 13.89. They have a beautiful dividend yield at 5.38. It's at the highest it's ever been in history. And they also it's covered by that 51% dividend ratio, cover ratio. So it's also,
so that means it's only paying out 50% of its income in dividends.
Yeah.
Okay.
To shareholders. So that means that they, it's covered. As long as they're not up, in 65 and higher, that's when, we'll be worried about things like that. They're in a transformation stage. And one thing is too, guys, they're going to get funded heavy by that CHIP Act out there, Paul.
Yeah.
The CHIP Act, like Intel's number one, that's going to get a piece of that cake. They got the new chip plant that broke ground in Columbus. So we're making chips here. We're not fighting over in Taiwan with that whole ordeal there. That's always like this book explained, there's always a fight going on for the chips over there.
Mm-hmm.
Been like that for years. So now we're bringing them home here. Look at Apple. Apple's doing what now? They're
bringing their chips home. Yeah.
Bringing them home now. It's crazy. I was reading the book and Tim Cook just dropped that. And there's a chapter in here called Apple Silicon. So it's all starting to tie together. And I'm like, all right, this is a position here, that I feel like I could get in. I only got one share today. And one thing I like too, the directors have been buying shares. They got new products coming in 2024. They're saving a lot. They're saving $3 million by the end of this year. Investors obviously don't like that. 8 to 10 by 2025. And like I said, they got a huge lineup of chips and products that are going to be coming out in 2024. That should help by that time, turn us around.
Right.
So as an investor, I mean, right now, buying this with the yield the way it is right now, I mean, this is a green light stock here for not financial advice, but for my portfolio.
Insider buying is something I think people need to. I mean, there's lots of resources out there to find it. It's public information. It takes a little bit of digging, but finding where these insiders have enough faith in their company, they're buying it. I mean, they know what's going on. They know what the company's doing.
One guy that's been buying and I pay attention to is Ken Griffin at Citadel. This last quarter, he purchased 3.92 million shares, guys, this last quarter. If he's purchasing that amount of shares, I'm going to as well. Mm-hmm. I'm kidding, but I'm going to try to get some. But my goal for this one is to be in the same position the way it is with MPW, to have 100 shares to be able to produce enough income where it will start working for itself to buying more shares. Therefore, I can go and get another, be able to find another stock or an ETF and do the same thing and rinse and repeat.
One thing I'd like to do is you find those that magic number of shares that the dividends will every drip will buy a full share. You know what I mean? So like you're getting enough you have enough shares, produce enough dividends. So every time you get a new drip, you're getting a full share. It just compounds and compounds and compounds.
It just start, and that's when compounding interest really starts taking over, Paul. When you start being able to, when it starts being able to buy one share of itself,
that's amazing.
That's when you can't even go work as hard as that right there, yourself, right. Even if you tried, at one point, right. It'll just be working way extra hard for you. And yeah, those are my only two things right now is just MPW was with the 100 shares. The Intel is the new position, that I'm going to be pushing for. And one more too, I'll give one more. Comcast.
Yeah, I saw you talk about Comcast the other day.
Telecom giant. Mm-hmm. They're undervalued. They have a lot of products. I mean, they own Universal Studios.
I always forget about that too, because people
own
are talking
basically
about Disney.
All of Philadelphia sports. They they're all integrated with that. Obviously Xfinity, Peacock. They also have a broken thing in with Disney too, with Hulu.
Mm-hmm. Yeah, so I know that's been talked about, that if Disney is going to go ahead and buy out their portion to take full ownership of Hulu. I think it's like 60-40 or 70-30 or something like that. Disney owns the majority stake in it, but not all of it.
And Comcast is obviously getting some part of the cake. Comcast is another one where insiders like Ken Griffin has just been buying up this type of stock as well. Earnings per share is growing double digits. Revenue is projected to grow double digits.
What's its dividend again?
The dividend for Comcast, I think, is 3.16. Let me give you guys a confirmation here really quick. The dividend is 3.12.
There you go.
So that means that, it's giving out $1.08 per share. Payout ratio 29.44. 5-year growth rate at 11%, and also at 5-year growing the dividend. So, I mean, guys, you guys remember that 10, 11, 12 system? Anything, anything between 3 and 4%, and that 5-year growth rate's over 10%. It's a prime candidate for it to be yielding, 10% return with the 11% yield in 12 years or in 10 years. So, this is another candidate that's a sleeper, and it's only at $34 where you can purchase to be part owners of, if you got any Philly fans out there, here you go. This is who's running the block.
That's awesome. That's great.
Yeah. So Intel, Comcast, and shout out to MPW for 100 shares. But these are the next two here for dividends. I can see myself getting another 100 shares in.
All right, cool, man. That was good.
Thanks.
Recap: go check out Intel and MPW, Comcast. We talked about JEPI and Palantir and SoFi. This all is going to be in the show notes, along with links to the Dividend Dog on Twitter, Options Legacy on Twitter, and Investing on a 9 to 5 on Twitter. Our link tree will be there, so you can go check out the shared Google Sheet and look at the I've updated live in real time. When I make an update, it gets posted on there, and we share it. You can take a look at it. Feel free to make a copy of it and use my little elementary school formulas that I use, because those are all formulas, where it calculates your shares, your cost on shares, and cost basis. So that's just a silly little thing I did. We're looking forward to next week. We're going to have world-renowned New York Times bestselling author Dave Greta on to talk about.
Dave Greta.
He's going to show us how to do a stock evaluation in the blink of an eye, and I'm excited to sit down with him and talk to him some face to face, and see what he's going to teach us about that. So
awesome. Yeah, I can't wait for that. I like the stock that we're going to be talking about. It's another banger, guys. So we're going to be like the Golden State Warriors over here. Just shooting threes, guys.
It's going to be fun. Anyway, so I'm going to get back to work now. We took the middle of the day to do a little recording. It's been crazy.
Don't tell our boss this.
Shh. He doesn't follow me on Twitter, so I'm cool there.
Oh yeah, they definitely not following us on Twitter, man.
All right, man. Hey, welcome back from your cruise. I'm glad you're back.
Oh yeah,
I'm glad
the
you get back
dog's
to the
back.
groove. We'll have a good weekend and we'll hook up next week. All right, buddy.
All right, sounds good, man. I will talk to you.
Take care.
You too.